Ming Company began operations on January 1, 2008. During its first 2 years, the company completed a number of transactions involving sales on credit, accounts receivable collections, and bad debts. These transactions are summarized below. Now, I'm not going to read all of those right now because we'll go through the transactions as we prepare the entries that are required to record them. On transaction A, in 2008, Ming Company sold $1,353,600 of merchandise that had a cost of $979,700, and they sold it on credit with terms of net 30. Then on transaction B, they wrote off $18,500 of uncollectible accounts receivable. Okay, let's take a look at the solutions to these. On transaction A, we increase accounts receivable with a debit in the amount of $1,353,600, and we credit sales in the same amount, and that's how we record this transaction, which was made on credit. Then we also have to record the cost of sales related to this. And the cost of the goods sold, or cost of sales, was $979,700, so we debit cost of goods sold in that amount and credit merchandise inventory, which removes it from inventory, in the same dollar amount. Then on transaction B, the company wrote off $18,500 of uncollectible accounts receivable. Using the allowance for bad debts, or the allowance method, allowance for doubtful accounts, we debit the allowance for doubtful accounts for the $18,500 that we write off, and we credit accounts receivable in the same amount. On transaction C, we received $671,800 cash in payment of accounts receivable. And on transaction D, in adjusting the accounts on December 31st, the company estimated that 1.6% of accounts receivable will be uncollectible. For transaction C, we debit cash for $671,800, which represents the cash we received in payment of accounts receivable. The offset, or credit, goes to accounts receivable. Then on transaction D, we need to adjust for the accounts on December 1st so that the 1.6% of accounts receivable is recognized as bad debt expense. And how we calculate that amount is shown on the following pop-up screen. You see we start off with beginning receivables, then we add in the sales we had of $1,353,600. We subtract off collections, and we also reduce our receivables by the write-offs, the $18,500 that we wrote off in transaction B. So at the point we are recording the 1.6% estimated bad debts on accounts receivable, the ending balance is $663,300. So we take that times 1.6%, and what we calculate is that we're expecting to have a required ending allowance of $10,612.80. The unadjusted balance was $18,500, meaning that we had a debit balance of $18,500 sitting in the allowance for bad debt accounts. So in order to get us from a debit balance of $18,500 to a credit balance of $10,615, that's rounded to whole dollars, we need to credit $29,113, and that will bring us from the $18,500 debit balance all the way to the $10,613 credit balance. And that's why we've got a credit to allowance for doubtful accounts of $29,113, and the offset goes to bad debt expense. Looking at the transactions for 2009, transaction E says we sold $1,501,600 of merchandise. and that had a cost of $1,309.9 on credit terms. On F, we wrote off $25,900 of uncollectible accounts receivable. On E, we debit accounts receivable for $1,501,600. The offset goes to sales, so we see a credit in that same amount. We also need to record the cost of sales on that transaction, so we also see a debit to cost of goods sold for $1,309,900 and a credit to merchandise inventory for the same amount. Then on transaction F, we debit allowance for doubtful accounts to recognize the write-off of $25,900 of uncollectible accounts receivable. The write-off also includes a credit to accounts receivable in the same amount, and that's how we take the receivable off the books. On transaction G for 2009, we received $1,386,300 of cash in payment of accounts receivable. And then on transaction H, we adjust the December 31st, sticking with the 1.6% estimate of uncollectible accounts based on the accounts receivable balance. To show the receipt of the cash we receive, we debit cash for $1,386,300, the amount that was given in transaction G, and we credit accounts receivable for the same amount. Then on transaction H, we have to compute the amount we need to properly reflect the allowance for doubtful accounts so that it equals 1.6 of accounts receivable, and the offset goes to bad debt expense. Keep in mind that what we are using here is what I call a balance sheet approach. When we use the allowance method that is based on a balance sheet account, then we have to focus on getting the balance sheet account portion of the transaction to be correct. That's why we're computing the allowance for doubtful accounts balance, and the offset goes to bad debt expense. If we were using a P&L approach, which would be a percentage of sales approach, we would simply compute the bad debt expense amount and let the allowance float, if you will, or it becomes the amount we force. But we're using the balance sheet approach, so we're concerned with stating the allowance for doubtful accounts is the correct amount, and we allow the bad debt expense to be that portion of the transaction. That is what it is. It simply is the offset so that our debits equal our credits. Let's take a look at how we come up with the entry of $27,330 as the amount to debit to bad expense and credit to allowance for doubtful accounts. You see the new pop-up window that appears near the top of the screen. For 2009, we start out with a beginning receivables balance of $663,300. Then we had additional credit sales that increased receivables by $1,501,600. We had collections of $1,386,300, so that reduces our receivables. And we also had write-offs during 2009 of $25,900. That also reduced accounts receivable. So we wind up with an ending receivable balance equal to $752,700. When we multiply that by the 1.6% uncollectible percentage that we're using to estimate the amount of bad debts, we determine that the required ending balance should be $12,043. That's rounded to whole dollars. So if we look at what the unadjusted balance was, it started at $10,612, and then we've had write-offs that impacted it by $25,900. We actually have a debit balance prior to making the 1.6% uncollectible entry of a balance of $15,287. So how do we get from a $15,287 debit balance to a $12,043 credit balance? Well, we have to have a credit equal to $27,330. And after we make that entry, we will wind up with the required ending balance of $12,043 for the end of the year 2009.